Okay, everybody, we're getting awfully close to the open for Friday's open range of May. Of course, today's range is going to tell us where the likelihood of the rest of the month will go, depending on whether we close above or below the range that we set today in Monday's trading. Now, looking at the S&P 500, as you may have heard me talk about several times before in the last 24 hours, we are looking at a head and shoulders pattern potential or a potential breakdown. You can see we've got a left shoulder here, a head, and possibly going to rally off this support to a right shoulder, leading into a toppy candle on Monday. If that happens, this would be perfect for me because I'm calling for a short on the market and looking for that to drop from that location. But if we do continue to drop, either way, I'm looking for a target of 2040 on the S&P. I think we've got major selling across the board. Good earnings selling off dramatically, as well as bad earnings, of course, with Twitter and LinkedIn dropping 20 to 25%. So bad earnings are getting walloped, and good earnings are still getting hit. So having a look at the plays, we'll start off with looking at the short side of the market, looking at SE. Now this is the energy sector, Spectra Energy. Now, going to have a look at the money flow in this stock, you can see that we've got some significant divergence. So the stock really hasn't gone anywhere, but the money flow certainly has. So I'm looking at this to break the $37 mark, and if we see this break that, then we could get an excellent opportunity to short that downward, and this could easily drop down to 35.50 or possibly even lower towards the 34.50 zone. This does report, though, on the 6th of May, so I'd be looking for options as a way to utilize this type of play because of the risk of course, holding into earnings. The next one is SDLP. Okay, now this is more of an active trader stock. You can see that we aren't really at any kind of significant level of resistance. That doesn't really come about until we get up to that kind of $17 range. But if we go down to the 1 hourly chart, you'll start to see what I'm looking at. And here we go, hopefully. Okay, so you can see this has kind of rallied up, and we've had the money flow start to come down. Now, this is kind of going a bit against the trend. We've seen a toppy candle towards the end of trading, and big volume coming in around 1 o'clock yesterday. So that's why I was interested in it, is that dramatic sell-off in the volume. So for that reason, it would be a very kind of short-term day trade type of scenario for me, and I'm looking at this as if we can get a break of 14.96, so a continuation on the downward side, and a target of 13.97, so about $1 on the downside, and looking at a stop loss around 15.33. So there's SDLP. Now, moving over towards the pharmaceuticals. Now, as I mentioned in the options during earnings special report we sent out earlier, I was reading on one of the Midnight Traders blogs, I believe on Tumblr, was talking about the fact that 520 stocks listed on the Nasdaq are up at least 30% year to date at the time of the article being publishing, which I think was last week. So up 520 stocks up 30% or more year to date. And of these 30% gainers of this group, 107 of them are down at least 10% this week. And out of these losers, 75 of the 107 belong to the healthcare sector. And 52 of those 75 are biotechs. So this has been a kind of a hot spot to look for. Of course, you never know where the bottom's going to be or where the top's going to be, but there's been a lot of stocks coming up as shorts, and Fold was one of them. We've got big insider selling happening on Fold. If you look it up in Insider Cow, you can see the money flow diverging out, the directional movement separating wide apart in terms of the selling power versus buying power, and volume really coming in as the stock starts to drop. So Fold is something that reports May 5th after market, and as a potential earnings play, you can look at the $10 May puts, for example, are priced currently at 55 cents. But so again, another kind of optionable play, and but a play nevertheless. Okay. Again, with the kind of healthcare type of scenario, we start to look at IPXL. So Impacts Laboratories is something that's had also a very dramatic drop in the money flow. It's been downgraded by a market analyst. You've got significant divergence. This doesn't report till May 11th, so there's a bit more time for this. And as you can see, if we get a drop below the low of yesterday's candle, then we could get a precipitous drop down towards where that kind of smart money level comes in around $40. So if you see, look at that level here, where that gap up zone was created. So we're looking at about $40.69. That gives us about a $5 drop from where we're currently at, utilizing a stop loss just above this resistance zone above. So IPXL also kind of made the cut tonight or this morning for a potential trade. OLED, similar kind of story. Again, you can see that significant divergence, obviously outside of the healthcare sector this time. They report on the 7th of May, and once again, this has got a potential, if it breaks this support level, you can see the significant bounce that happened right off this 22.3% Fibonacci zone. And so that 22.3 Fibonacci is also where that smart money buy zone was right here, where we got a straight down, straight up. Usually the presence of high frequency trading creates that type of reaction, and if we were to break that, it can also cause a sharp reaction down. Now we'd also be breaking the 50-day moving average, so it's kind of a special situation where we've got a few things going on. So breaking that zone right here around 43.50 would possibly bring it to a drop at least to $40 and possibly lower to around that $38 zone, which is why I was looking at that as a short at least to the $40 zone, which is about 10%, and also looking at the $43 puts, which are currently priced at $1.84. And the last on the short list is AGO. Now, this is an interesting story. You can actually go in and you can see that there's been a significant drop in Assured Guarantees Limited shares. Now, this is apparently one of the biggest drops it's seen since 2013, and looking into some of these the news articles here, you can see here on Bloomberg, basically Assured Guarantees drop was to do with the Bermuda-based bond insurer subsidiary and Surety Guarantee Corp backed combined $3.6 billion of Puerto Rico obligations as of December 13 showing. And basically, it's basically to do with the defaulting that's going on over in the Caribbean and, of course, in the worldwide markets, and the significant impact it could have on this company's pricing. So there's some news backing behind this that you can have a look into, and going through Bloomberg, you can look it up through Yahoo Finance. But you can see the dramatic drop in money flow, of course, is following out of this stock. So this was quite an interesting play. These guys also announced on May 7th, and there's selling on the insiders. Obviously, strong divergence on the money flow with news backing, and the rest of the market may not have caught up to this yet, but this could be an interesting play where if we see this head and shoulders play out, where we've got a left shoulder, head, and then a drop, a breach of this level could see a drop down to 23. Again, a rally in the market would help this greatly to bring it up towards that right shoulder. We get a better entry price, but this is something that I'm looking at quite closely, either as an option play or as a stock play. But that's something definitely worth following in my view. Now, on the long side, something that I'm obviously looking at the market in a very bearish view, but there are some interesting longs out there. For example, Michael Kors. Now, my significant other, while we were in Mexico for the last few months, she said, "Johnny, all I would really love is this Michael Kors watch and this Michael Kors ring." And she showed me a picture of it, and I thought, all right, I better start trading more, because that looks like $1 million watch and ring. But upon review, the two items probably cost no more than about $300-400 combined. So while the companies like Coach and so forth are taking a real beating, Michael Kors has got seems to have a really niche market where everybody loves them. And even talking about it in our trading room the other night, people were all over it, saying, "Hey, we love this brand, and we're all and we're buying." And my significant other went into the store actually yesterday to buy her girlfriend a birthday gift, and said there was not enough store clerks to serve all the customers. So I think this is an interesting stock just for personal reasons, but what makes it interesting from technical reasons is that we're in a falling wedge, and we're condensing in that wedge right to a point, and you can see that as we fall, the money flow is actually going up. And if we look at the 1 hourly chart, you can actually see that we've got some strong movement up in the money flow, and we've also got strong volume coming in on these buy candles, right? So you can see kind of big volume coming in on the buys, and showing some power and strength behind the rally. So this is one of my favorites of the longs, and who knows? I mean, it still could fail, but I'm looking at some of those May 15th calls that are currently priced, the $64 strikes. May 15 calls, which are 35 cents at the moment. But even as a stock play, either way, I think this has got some real potential. And if you have a look at where to, I mean, this could be a rally all the way back up to that $70 plus range. And if you look at the longer term price, this was once a $100 stock. So it's been beaten down, and I think that out of the that retail group, this one's kind of poised for a potential reversal. So there's the first on the long list, so to speak. CVEO is another one worth watching today on the long side. You can see that we've got a massive rally yesterday, 18.83%. So the key here on CVEO is trying to get a good entry point. So what I'm looking at is going down to the hourly chart. Here we go. If we can get a pullback to where that kind of supporting moving average is around 458 would be ideal that I'm looking for, and then a rally up. If we extend this a little further, okay, you can see the big volume kind of starts to come in here. So we're looking at a possible kind of flag or pennant. So looking at the measurement of that zone and looking at a possible extension from that, which would bring us up to roughly around 530. So from 470 to 530, we're looking at about 60 cents. So a decent profit potential, and if we can pull back to where that 9-day moving average is around 442, or as I said, even 458, which is where the 5-day exponential is, then we got even more. And in terms of a stop loss, I'll be looking at there, kind of just beneath at, let's have a look here, looking about 439. Okay, so there's CVEO. All right. GNW, another one worth watching. This is a potential flag as well. Had a really big rally. The financials have been relatively strong against most of the other weak sectors. So GNW is something that I've got an eye on. The only thing with this one is there's not a huge amount of profit potential, because I want to see a break of about of 913 until it kind of breaks those previous resistance levels. So a break of 913 should take it up to at least 964. So there's about 50 odd cents there in the profit margin, but the stop loss probably around 887 is where I'm looking at. And so there's not a huge amount of profit on the table, but this could be a possible play on the dead cat bounce of the market, considering the strength of the financial sector. And last but not least, a hedge against the energy shorts that we talked about earlier on KOS. Cosmos Energy, you can see that on the very, very short term, we're on the hourly chart still, you can see an ascending triangle forming out of a flag. So here's the flag. Okay, there's the flag. There's the flagpole. And there's the possible extension, which you can see I've already measured out there. So this has got some steam behind it. You can see the volume building, the money flow going up as the stock basically consolidates sideways. And this is kind of a breakout play. Again, an energy long to kind of hedge against the energy shorts that we talked about earlier. And this has a good potential pop that if it breaks 995, this could head to at least 1057. And where I'd be looking at as the stop loss criteria is around that 950 area, 957 area. So this could, of course, keep going, but looking at it as a hedge against the other shorts, it could all line up. So hopefully this research helps. Again, use it to your own discretion. This is not recommendations, but purely for research and educational purposes only. But of course, we always look forward to seeing you in our next executive summary.